Do you give any credence to gamma exposure sites like Spot Gamma to help find levels? Um, I don't, but that doesn't mean that they don't have value. I just have found that um, it's a distract. These kinds of things are distracted. Thank you, Michael. I find them to be a bit of a distraction. Like, there's a Max Payne website where you can look up any stock, and for the day or the week, it'll tell you what the max pain level is. And you can look at, gamma exposure and the dark web and the light web. And there's so many places you can go for data that over the years, what I found is that the less places I went, the less things I looked at, and the more I focused on price action and just a few things. Like, I really don't have a lot on here. In fact, if you look at this, I know this looks like a lot, right? But it really isn't. These four charts tell me everything that I need to know about the stock. Now, the only addition here that you may not have is this ribbon here. So this comes with CTV. This is a convert the vert cycle oscillator. So forget about this. So if I look at this chart, look what I have here. Weekly, daily, hourly, and sometimes I change this to 195 or 78 minutes. This is 15 minutes. Sometimes I change it to a 5 or a 30. If I look at my weekly chart, what do I actually have? All I have here are the broads. What are the broads? The 50, the 100, and the 200 period moving average. Those three. I've got the Bollinger Bands in red and blue, with the pink here being the mid of the Bollinger Bands, otherwise known as the 20 period simple. That's it. This is my 321 indicator, which is similar to the squeeze, just so I can see when it's in compression and momentum. That's it. Same with the daily. Now in the daily chart, I do like to look at the RSI indicator. This is just a stock RSI indicator just to show me relative strength when it's, when it's overbought, when it's oversold. I like seeing that. And I have an hourly and a shorter term time frame. That's it. As far as the markets and knowing what's going on in the markets, this workspace, which you can build on your own, there's a PDF in the files. If you go to the new trader workshop section, you'll see where I put all this together. You can watch that video. You can go to the search, where you can search up any video you want. Just type the word internal, and you'll see the video where I show you how to set this up. I can tell you what's going on in the markets from top to bottom because I got NVIDIA and Apple. These control the market. When this one gets bought, this one sells off. Sometimes they move together. I like looking at these as my compass stocks. This is the S&P 500 futures. So I just kind of look I could put the S&P here if I wanted, but I have ES. I like seeing ES because I like seeing the levels like 6,700, 6,500. I like seeing numbers like that. I do have the IWM, the SPY, and the Qs. I change the time frames, but usually I just have the daily charts of the three major indexes here, indices. I got the VIX to show me the fear index. I've got the dollar, and I've got 10-year treasury yield, put call ratio, and then here are my commodities. I've got gold, but sometimes I change it to silver. Sometimes I just change it to the XME, which is the ETF of the metals. I've got, usually I put Bitcoin here because I want to see what's happening with Bitcoin. And then typically oil is here. I mean, that's everything. I can look at these charts and in a minute and a half, I know exactly what's going on. As far as gamma, then all I got to do with gamma is just go over to the options chain and go look at where the big number is. Holy cannoli, bang, it's right there, 672. Where's the big number? Bang, right there. And I can watch how these numbers change throughout the day. And I've got literally everything I need. Why do you trade out of the money options like SPY? How do you know it will go down? I don't know that it will go down. And I don't typically just trade out of the money. But if price is sitting at, say, 669, It doesn't make sense for me to buy the 670 puts. They're too expensive. So do I buy the 669s? They're still too expensive. So I'll just go slightly out of the money to bring the cost down. I have an idea of what the expected move is. It looks like the expected move could be down to 665. So if you saw, I put on a trade the other day, 668, 666, a little too wide vertical when price was just here. It's just slightly out of the money to bring the cost down. You could certainly trade at the money, but they're much more expensive. But I don't go way, way out of the money all the time. The thing about out of the money options is you really have to know the timing. How long are you going to give the trade? If I'm expecting a pop in the stock, then out of the money is probably a good idea. If I'm looking for a slow grind, then just out of the money, just there. You can go in the money, out of the money. But what has happened over the last year or so is that volatility is so high, implied volatility is so high, that the in-the-money options are priced to lose money. They're too freaking high. So I have to go slightly out of the money. I use the expected move. You'll see, Boo, when you go through the videos, especially once you get through the basics and you're starting to work on the advanced videos, do not skip. Get every single video. Make sure you go over to the Nugget Farm. Don't watch the Nugget Farm videos. That's for once you're ready to go live. But underneath that are the 10 musts. And this will explain the out-of-the-money options. It'll explain why do we trade verticals instead of just calls. It'll explain the options chain. It'll explain options pricing, how to get the best price, how to get the best entry, how to lower the cost, how to work the market internals, how do I read the market internals. Literally everything that I have learned and I have taught, I have culled it down to 10 musts that you absolutely must understand and must master. We've done 6 of them so far. I'm doing another one this Saturday. So you'll get all that information there. But the main reason why I'll go slightly out of the money is for price. Slightly cheaper. Plus, because there's more premium in out of the money, when you get the volatility expands, you get like this volatility explosion, then that increases the price or of the option exponentially. So you get a really nice pop on it.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.